Thank you very much, and welcome to everyone who's joined me. We have 3 presentations to kick off, and then we have a panel of 3 to debate everything that we've heard. So first of all, we're going to have 3 very short, sharp and fascinating presentations. We're going to kick off with Dave Fletcher from Kudos. We'll then move to Michael O'Loughlin from Token. And then we go to Catherine, who is leading on the Open Up Challenge at Nesta. Each of them will fascinate you for 5 minutes and answer a key question from me. As we said, as Constanza said, put your questions into the chat and I will pick them up as we go through. So first off, I would like to welcome Dave Fletcher from Kudos. Your 5 minutes start now.
Hi there, guys. Just going to share some slides with you all here. Thanks for inviting me on, guys. My name is David Fletcher. I'm head of commercial here at Kudos. Kudos are a credit reference agency and open banking provider. Essentially what we do is we help financial services providers like banks, mortgage providers, credit cards, motor finance, personal lenders. We help them make better decisions with their origination and customer management. We do that through leveraging open banking data and the richness of behavior we can glean from transactional information. And typically this is spread across income verification, affordability assessments, risk and fraud. We're very early days with the APIs in 2018 when open banking first came about, and we've been at the forefront of the technology ever since. Today I'm going to focus on some of our feedback we've had from our clients and partners around the impact of COVID on their operations and how open banking has been helping them. But I'd like to start just briefly by looking at about how the wider FinTech community can actually help by leveraging open banking to solve certain problems within the industry. So we have a problem that arreared a few weeks ago, which was around the differences between self-employed and employed individuals with the amount of furlough payments they could get from the government. The FinTech community took it upon themselves to deliver a solution off the back of open banking over a weekend in a hackathon, developing a solution called Credit. Jointly developed with 11FS, Kudos fronted, and a bunch of other industry professionals who jumped on board to help with a variety of things like privacy policies, user experience, government lobbying, etc. The idea of this is actually to help self-employed people verify their income they've had and maybe unlock the ability for the government to support them by proving what their income has been over a period of time. And I just like the fact this is a nice way of actually demonstrating both the power of open banking and the power of the FinTech community who can come together and bring a solution to market over a weekend. More broadly, I just wanted to talk about credit risk impact on our client base. I'm going to focus today on personal lending, but this can be extended into SME lending as well. A few things we've gleaned from talking to clients and prospects in the marketplace is that demand is still very high. We see from our intermediary partners that there is still a consumer demand and business demand for credit, especially when people are looking to supplement drop in pay, or potentially future-proof against potential drops in pay in the future. People are actually preparing a lot more in the current economy than they would have done in normal times. What we have also seen is lenders have scaled back their origination of loans. That's either removing themselves completely from market temporarily, all the way through to changing credit risk policies to target very safe populations, or restricting the volume and value of loans that they're actually putting to marketplace. That leaves a huge chunk of the market underserved and a massive opportunity for some organizations out there as well. Third point is around volume of customer management. A lot of resources have been directed to customer management as we have lenders actually having to liaise with people on payment holidays, repayment amounts, in the motor finance world, looking at things, unintended consequences like the value of vehicles in PCP agreements as people are taking payment holidays. There's a whole range of customer management queries that are going on as well that are eating up resources in lenders. My final point here is that credit risk has fundamentally changed. The reason lenders have pulled back from some of their origination volumes is that they can no longer reliably assess risk as they would do in a normal economy. The ability for someone to repay a new loan agreement is no longer able to be determined by traditional credit risk. The history of someone repaying loans is no longer indicative of their ability to repay in the future. It's much more looking at a real-time performance indicator of someone's income and expenditure. And also within that context, the FCA has not changed any of their guidance or responsibilities lenders have about calculating affordability. So whilst all of the playing field has changed around income and expenditure, the rules are still the same from the FCA, that affordability has to be front and center of these decisions that are made. Equally, we see a huge change in the short term of people's lending appetites. So people taking on a huge amount of credit risk is sometimes no longer represented on the traditional bureaus who take 30, 45 days to update. So we have lenders here with a blind spot that they could be servicing customers that have taken out recent credit, and actually they're not able to assess that. These are a few of the areas that open banking can help, and we've been working with our clients to try and surface some new features on top of our standard product to help with that. So we're in a situation here where there's three key areas that are kind of the key ones that organizations are looking at. So the first one is income shock. So this is the ability to leverage transactional data from open banking to look not back at the history and the predicted variable of income, but also to see if there's a proportionality of income drop, be it full or partial, and identifying that as a feature when you're doing an affordability assessment. You can only do that by looking at real-time data in open banking. We extend that to look at industries that a lot of lenders who are still in the market looking at the employer type and industry type as a risk indicator now, where they weren't looking at that previously. A lot of lenders like Amigo, for example, are still in the market servicing key workers, for example, and they need to do that in an automated fashion. As application fraud is on the increase, there could be a potential for people to actually misdeclare their income or their employment status. Secondly, looking at loan inflow data from open banking, you can easily identify in real time exactly if someone has been increasing their borrowing activity, and that should take account for an expenditure calculation. By ignoring that information, an affordability assessment could be narrowed in on misinformation, and actually you could find yourself servicing a customer that cannot afford to repay that loan and falling foul of the penalties put in place by the FCA. Mm. And finally, in customer management, the typical way of looking at income and expenditure and the traditional methodologies is a very expert-led approach, 30-minute conversations, talking people through their income and expenditure. It's quite an intrusive conversation. It's time sensitive as well, and very hard when people are working from home. Using open banking in this context can really help the customer relay their information on their income and expenditure and their reasons for asking for a bit of support from their lenders. But also it can help fund for those decisions of actually those people who are vulnerable and need most help are getting access to conversations with experts, while the mass market can be dealt with in an automated fashion using something like open banking. So trying to stick to my 5 minutes here, my final comment is that open banking generally can help people take advantage of this situation as well. There are opportunities, there are good risk customers out there that are being underserved by lots of lenders. If you can adapt your operations and your way of working in this environment, you've got an opportunity to benefit and come out of this economic crisis stronger than before.
Thank you very much, David. Key question for you on this. What is the metric by which we should judge your success, Credit Kudos's success in supporting and financing the economy during and after this pandemic? How do we know you've done a good job?
For me, I have a commercial head, so it would be the number of new logos we onboard during this time and the number of API calls. We know there's an organic increase in API calls from open banking from 27 million in February last year through to 350 plus million in February this year. I can only see that increasing as we go through this period where open banking can help people in the time of crisis. Mm-hmm. For me, it's about how many clients we can get on board and support them in that process, because there's one thing giving new data to the market, it's another thing supporting people in how to deploy that and get value from it.
And those customers who should surely be flocking to your door, what's working with them? Are they saying, listen, I want to avoid the FCA's fines, or are they saying, actually, I'm looking for those good risk customers? What's driving their behavior?
It's a balance. It's very much a balance. So they want to take advantage of the new opportunities of lending populations that they can serve, but they also want to make sure that they're not going to get hit with a fine or a claims management company in 6 months' time when the dust settles.
So they're looking for the good clients and they're looking to avoid the FCA's fines. What advice would you give to the FCA on affordability? How do they adjust their rules to enforce real-time affordability rather than this shocking lag in time before you're able to make a good affordability assessment?
I personally don't think that the rules themselves need to be changed. The feeling behind the rules is that you should be serving people who can afford to repay. That does not change. I would suggest that the FCA could come up with some guidance that actually, because income and expenditure is under fluctuation at the moment, that new data sources like open banking should be considered as there are significant deficiencies in looking at ONS expenditure, for example, which aren't representative of people's expenditure in the current economy.
So the rules don't need to change, but the guidance does. Thank you very much. David, Michael, we're going to come to you next. Token, same question for you. Supporting and financing the economy. Michael.
Okay, guys, hi there, and thanks for the opportunity to speak. Fantastic. Okay, all right. So, hello, thank you for your patience. My name is Michael O'Loughlin. I'm Managing Director at Token. The irony is I'm an Irishman in Germany, in Berlin at the moment, remotely working, and the team are in London from Token. We're an open banking platform, and our purpose, or our mantra, the aim, the goal is to become an alternative network, pan-European network for cards. So we've heard a little bit about what open banking is. I won't dive into that. But what I will do is go through what exactly we're doing. So the next slide, if we can. The main purpose of open banking initially was to drive a shift away from cards as, sorry, someone's changing my slides. Can we go back to the previous slides? Someone has control of my slides. Thank you. So the main purpose is to highlight the fact that cards are expensive, and they're expensive not just for the consumer, but also for the merchant as well. And with open banking and indeed Token and other players in this field, we're really driving account-to-account transfers. We go to the next slide, please. Thank you. Token does is we're putting a bank in every app. So when you go to purchase something online or within an app, what we do is we literally make a bank payment directly obvious, and we enable that seamlessly. Move forward, please. Thank you. So if we look at what we're doing in this space related to this call, that's quite a complicated diagram. I'm happy to share it with you afterwards in detail, but we thought rather than dive into the charities piece initially on this call, I just highlight, we decided to go directly to source. We thought we could start off by helping the UK people by going to the government. The government, kudos to them, they came out and said, we have put a certain amount of money aside to distribute to those in need. Those be the self-employed, the small businesses who actually needed to get that. They said that they outlined what their criteria were going to be. And as a Crown commercial service provider, supplier, as of the month before, so definitely a brand new relationship with the government for Token, we contacted them. I'll be honest, we were very surprised to get a response same day back from the government saying, we love your idea, could you give us more detail? So we did. We drew up a process map, but the main thing in our proposal were these three things. Based on the criteria that the government needed to distribute the funds, Token, through open banking, said that we can answer these key questions. Is the potential beneficiary eligible to receive these funds? Is the correct person being paid? Is it the right bank account? And how will that person get or receive their money? So we go to the next slide, please. Thank you. So based on what the government solution looks like, we can obtain a person's transaction history, very similar to what Credit Kudos highlighted there. But what they were asking for to actually receive the funds was 3 years history. And you can do that with the consent of the customer. And through our direct access and API direct connectivity across the UK, we can provide that. Also, we can categorize it by income to actually calculate that 80% funds due to the individual. And we can identify who the beneficiary is, and leveraging, if we go to the next slide, the faster payments network, which is quite unique to the UK, despite popular belief around the world. We're quite fortunate to have a real-time payments network to actually push the payments directly to them. So that's essentially what the government piece was. That's the government proposal. I'm happy to say that we've been put on, I would say, not a shelf, but certainly on a list by the government to say, that's a great idea, guys. We're going to put it on and showcase what you can do for everybody. I think we probably possibly missed a beat, and I say we, the proverbial we, insofar as the government hasn't necessarily embraced it yet. We're in dialogue. I'm not allowed to talk about what that is yet, but we're certainly progressing this matter. The aim of the game was to get people the funds before the June date that was outlined. The fear factor is that the conversations won't progress at a pace that are necessarily going to achieve that possibility. Separate to that.
What is your ask of government then, Michael?
to literally embrace the software, roll it out. We can give you the reach immediately, through our direct API access. If we just go back to the previous slide, not to disperse, but just focused on the 5 minutes that I have. The previous slide around charities, we are working with a number of charities right now. I'm not in a position to label them simply because the call campaign started end of March. It's underway where we've highlighted that we're removing all payment fees associated with any charitable donations or charities wishing to receive donations. They can leverage our rails and access, which obliterates the cards fee side of it as well, similar to what was highlighted on the previous slide on the benefits of open banking. Let me just go to the final slide. Thank you. There are other things that open banking can help people in need right now. It's the previous slide, thank you. And this is the likes of request to pay. Right now, cash is king, everyone says, but you can't actually get your hands on cash because that involves meeting people. If you need to send an invoice to someone, you can do that seamlessly with a request to pay push. And that can be done via many apps right now. Token enables that through direct access to banks. And then from an expenditure side of things, we have numerous amount of clients. We just hit 80 clients now. And many of the clients lie within the PFM side of things, so personal finance management. During a crisis like this, everyone wants to know money in, money out, where they're spending their money and where they can cut expenditure. And with our tools, you can do that too. And I'll leave it at that. Thank you.
Thank you, Michael. And I think your summary to government is to adopt your proposal immediately with extreme pace. Thank you very much for that. We're now coming to our third presentation, which is from Catherine, Open Up Challenges at Nesta. Catherine, 5 Earth minutes, please. Thank you.
Hello, everyone, and welcome. If any of you haven't heard of Nesta, we're currently running a challenge called the Open Up 2020 Challenge, which is a challenge prize which is really aiming at looking at unlocking the power of open banking for consumers in the UK. I think we'll have probably heard from both our last two speakers about how kind of open banking is accelerating right now. And I think that really what I want to kind of dig into is actually what it means for consumers. So these are our 15 fantastic finalists who were selected by an independent panel of judges at the end of 2019. And they were really kind of championed as really key movers to really support consumers to understand and have value in open banking. But the world for consumers has really changed. So if we can move on to the next slide. We actually carried out some research to try and understand actually what consumers were thinking about right now just at the very end of March, beginning of April, to really understand what was going on. So the key thing is that people are worried about money. We heard that 62% of people in the UK have financial concerns. And this really raises significantly once you kind of exclude people who are retired, but really high numbers, and also a significant jump from January. So about 44% in January, up to 62. So people are really worried. And the most financially vulnerable are being hit hardest. So in particular, 25% of people in non-traditional work have financial concerns, much higher, which is actually up 25% from 50% at the beginning of the year. And 41% of those aged 18 to 24 have reported that they had already borrowed money from friends and family in response to the crisis right at the beginning of April. So really kind of those young people and people in non-traditional work being hit hardest.
So a question for you, what is non-traditional work? Are you referring to the gig economy?
So it's a mix of gig economy, freelancers, people who are on 0 hours contracts. So it's a really wide range. We did a panel survey. So we're looking at kind of the cohort of all of those people in kind of non-traditional work, so not employed by one employer. So whether that's full-time or part-time, so everyone who's not employed by one employer and has a kind of a flexible work schedule. So what are people doing about this? So people are taking action to take control of their money. And I think that some of the stuff we're seeing, which is particularly interesting in relation to open banking, is that 30% of people are cutting back to basics and 19% of people are really taking time to reorganize their finances, which we're really starting to see that open banking is really supporting them with. They are looking for support, and in particular 41% of people said that they would like to hear about financial products that can be genuinely helpful right now. And that actually raises in certain regions, so for example in London it's actually 54%, and in the Midlands it's actually 51%. So consumers are really looking for help. And Constance, if we move on to the next one. We're really impressed and incredibly proud of all the fantastic finalists who are actually responding to this customer need. And so I'm just going to highlight a couple who are really demonstrating the true power of open banking applied to support those consumers. So Portify supports modern workers, so primarily flexible and gig economy workers, and they continuously support their customers, helping them with financial wellness, and also a limited credit line. They completed a report using insights thanks to their open banking connection with their customers that showed that in April already 30% of income was down for all of their customers, and actually kind of wrote a report which I'd highly recommend you go and read about how the government can better support gig economy workers at this time. They've also extended a 0% interest credit line to their users to the point where they have enough money to provide that. And again, it's a credit line as opposed to a loan, so slightly different compliance there. Tully, part of OpenWorks, which many of you will have come across, traditionally provides debt advice to people and helps them file for bankruptcy, for example, but actually has completely adapted their product to launch a way for people to very quickly and easily access a payment holiday using their open banking data, working with kind of large gas and utilities providers, for example. Thinking about those other vulnerable users we spoke about earlier, Clio is really looking at adapting and offering a range of features to support their primarily younger customers in terms of actually providing them with advice in terms of how they should be managing their money, and when they're likely to see shortfalls. And similarly, Money Hub, which is another kind of really fantastic PFM, is offering a really wide range and has actually decided to offer people 6 months free trial on their kind of premium product to allow people to really take stock and understand their finances. And they're also working with a lot of their business customers to enable their business customers to provide their Money Hub personal service to their employees, to help their employees really understand the impact, for example, of furlough and the decrease in wages, if that actually is the case, and how they can then take action to make sure that they are stronger financial position in the long term. And finally, Updraft is a kind of loan consolidation service. I think the real kind of key thing, coming back to what Credit Kudos was speaking about before, is it's a really careful time in terms of actually making sure we're supporting consumers across the UK to access affordable credit, and making sure that they don't take on more loan than they can, or particularly avoiding high cost loans. In that research we just spoke about, we'd actually seen that 3% of people have already taken out high cost loans, which obviously is very challenging if knowing people have taken out kind of payday lending when realistically there isn't going to be a payday coming, is really, really hard to see. And Updraft is looking at supporting a lot of users to really help them choose which loans to pay off and consolidate their debt. And they're looking at kind of extending that product as well later this year to enable it to do that in a way that actually helps people to choose which loans to pay back and avoid, for example, being in costly overdrafts.
Perfect, Catherine. Thank you very much. We have had quite a long time from you there, so I'm going to cut you off in your prime, other than to ask you one question, which is, what is the metric by which we evaluate your success, Nesta's success? What is that metric?
I hope that you can judge us on the fantastic success of our finalists, but realistically, it's about really consumers valuing what the value that they do get from open banking when they're using an open banking product, making sure that that value is really coming across and consumers say that they trust it and love it.
Okay, so how are you tracking that?
So we're currently tracking that using a wide range of metrics across our marketing campaign, as well as looking at working with our finalists to look at things like their net promoter scores, Trustpilot, etc.
Okay, please share that with everybody who's watching us, so we can watch along as your metrics go in the right direction. Catherine, what is your ask of government?
I think my ask is less so of government and more so of the wider community, which is to continue to support fintechs to be able to offer debt and loan and actually be able to respond, particularly through financing. And in particular, you know, if you have got investments in fintechs, please do continue to support those fintechs so they can continue to operate and support consumers at this time.
Thank you, Catherine. Right, we are now going to move to the panel session of our conversation this afternoon. And I'm going to start with you, Simon Cureton. You are CEO of Funding Options, a company I know very well. So, Simon, a first question to you. During this pandemic, government support to business is wall to wall. You're in the SME financing space. Government support for business is very comprehensive. We have the furloughing scheme, we have VAT deferrals, we have the coronavirus business interruption loan scheme, we have bounce to deploy CBILS and bounce back loans principally through the big banks, with non-bank lenders apparently participating in name only. Is this true, and what is your role?
Okay, so I'll start with our role, just to clear that up. So Funding Options is Europe's leading marketplace for SME lending. So we sit between businesses of any kind, big or small, of all different natures, and a lender panel of 200 plus partners. So we work with the big banks, the CMA9, neobanks, challenger banks, and all of the alternative lenders. So our role at the moment, one would think that we are incredibly busy, and that is absolutely true. So we have seen enormous volume in this time of crisis, particularly commencing in March. So since the 1st of March, we've seen around £1.8 billion worth of loan applications come through the Funding Options platform, which is absolutely huge. The real challenge we are having as an aggregator is placing that volume or matching that demand with supply. Quite simply, notwithstanding the fact that the government's announcements have been incredibly broad and in that sense very, very positive, unfortunately the execution of that intent has been sadly lacking. And the single biggest issue is the fact that the backing of the government and Treasury sits wholly behind the banks and a group of traditional lenders who are the accredited lenders to the CBILS scheme, and therefore by default they will be the accredited lenders behind the new bounce back loan scheme. And so what you've done in that decision making is take out the area of the sector that is best placed to distribute loans at speed. And we're talking about lenders who have the capability to distribute 100,000 loans on a monthly basis, which is huge scale. Just to put that into perspective, and hopefully I get my stats right, but I was on another webinar this morning, and I believe in the last 4 to 6 weeks since the CBILS scheme was announced, I think there have been 26,000 loans approved and therefore distributed. Just to put that into perspective, one fintech lender can distribute up to 100,000 loans a month. So we're clearly missing a trick, and unfortunately the ecosystem that we sit in right now is broken. And open banking does have a critical role to play, but maybe I'll let you ask the questions and guide that for me.
So a broken ecosystem, let's start with where the Treasury has gone first. They've gone to those big banks that are struggling to cope with the SME lending space. It's not their sweet spot. It's actually what the alternative lending community came together to solve that problem. I've been reading that the big banks are looking after their own customers rather than looking to help customers more broadly who might just bank with another bank at the moment. Now, they're saying the reason for this is that they have no banking history with that customer. This is a problem that open banking was created to solve. Why are they not using open banking? Absolutely.
So bang on the money as always, Louise. So for us sitting on the sidelines looking at this is it's a fallacy ultimately. So for a bank to say that it couldn't possibly lend to another bank's customers, or even somebody who's banking outside of the CMA9, it just doesn't ring true for us. So open banking, as you say, was created to solve this very problem. I personally believe that this is an incredible opportunity for the open banking initiative as a whole to really, really rise to the fore. I think there's been some fantastic examples of the people who presented before who are using open banking for good. And actually some of that can be used very, very intently in this particular COVID-19 crisis situation. But for us, I think now is the time to push the merits of open banking and potentially even mandate its use, certainly across those lenders that are within civils. We use open banking. We incorporated that into our customer journey a few weeks ago. We work with a large group of FinTech lenders who consume that data digitally and use it in their underwriting process, which again exacerbates that problem of we would love to be using that now to distribute civils loans or to distribute bounce back loans when they come into play on Monday, but we just can't utilize that sector of the industry. But for me, the government could stand up and actually mandate the use of open banking, I believe, in response to some of these claims that are being made, because the time is absolutely right for that to happen.
Okay, so you've been very clear about what it is you think the government needs to do, and I'll wrap that up into mandating open banking with extreme prejudice. I've got a question though about competition and innovation. What has this done to competition in terms of the Treasury directing all of that support through traditional incumbents who clearly can't cope with getting SME loans out of the door in an efficient manner? What has this done for competition, and crucially, what has this done for innovation?
Sure. So I think there is what has it done and what could it do, and I'd probably focus more on the latter. So right now, as things stand, the ecosystem still exists, but if the status quo does not change, in my opinion, within the next few weeks, and I don't mean many weeks, I mean a few weeks, then actually I think what we could see is that ecosystem starts to break. So the alternative lenders, for a number of reasons, have been excluded. I think we have heard from very good sources that the level of knowledge about the alternative finance sector, the role it plays, how significant it is, that is lacking within government and Treasury. And I think the level of trust, therefore, of that sector, it simply isn't there. So whilst if we look 3 months back, it may well be that everybody was thinking, wow, what an amazing fintech sector we built here in the UK, and it is amazing. But actually, maybe what was being masked were some deep fractures in the sector as a whole in terms of how it is perceived by government. And COVID has quite plainly shone a very, very significant light on that, and I think that's important. So if these issues aren't addressed in the near term, then we could actually see some of that competition disappear. And by that, I mean, there could be some lenders who fall into difficulty, some lenders who actually don't continue in business, and a number of different players in the ecosystem who no longer have a role to play because effectively they're kept on the sidelines. And we can see this because we're at the epicenter of the ecosystem, and we're feeling everybody's pain, and everybody's having to pivot. Everybody wants to try and help, but the options are really limited right now.
Okay, final sentence, a short one, on the impact on innovation.
Stifled. Innovation could be very much stifled. It's been thriving. The intent is there. There are some brilliant people and brilliant companies, but if you are intently left on the sidelines, then you don't have a role to play.
Thank you very much, Simon. I'll come back to you as I weave a few questions from our audience in. Thank you very much for those questions. Keep them coming. I'm moving now to Craig Fox, Silicon Valley Bank. You're a chief chappie in charge of the growth stage fintech portfolio. So my question for you is, how core is open banking to your own operation in supporting and financing the economy? Craig.
Yeah, hi Louise. Hi everybody. Thanks for including me today. So I lead our fintech sector for Silicon Valley Bank based in London. Just to reiterate, SVB's really the only commercial bank focused exclusively on the innovation economy. We've got a 40-year track record in the States, and we're about 8 years into building and scaling our business in EMEA. So in terms of how core, open banking, is to SVB's platform and growth, I mean, it's absolutely core to the platform and future. integration has been a big piece of our offering for many years, whether that's been open banking like integrations with our clients' platforms of choice, like Xero, Expensify, QuickBooks, developer APIs for our clients to integrate directly with their SVB solutions like virtual cards and payments, or API infrastructure, to augment our solutions with FinTech partners such as TeamPay and Stripe, for example. In terms of our, kind of current capability, I think we've definitely got a long way to go in terms of, adding additional functionality, and it's absolutely core to the future of our ability to service our clients.
So speaking of your ability to service your clients, I believed, help me if I got this wrong, I believe you are being certified as a CBILS lender. Is that correct?
That's right, and I definitely agree with a lot of what Simon was talking about, right? So I think in times of crisis, there's often never a perfect solution, and speed is probably the most more important than accuracy at that point in time. I think the EFG scheme, we've done a lot of research and studying on it. SVB was never originally a part of the existing or precursor EFG scheme, just because the mechanics of how that worked, we don't need to go into that, but the mechanics of how that worked wasn't necessarily applicable to a vast majority of our customer base, which is, high growth, oftentimes loss-making, venture capital backed, and private equity funded, technology companies. Now with the expansion of that scheme into the kind of the new version of CBILS, we think it's prudent to absolutely go get certified, but that has not been a extremely fast process. I'm not leading that, but obviously staying close to it, and it's definitely been time consuming. I think adding additional players to that, particularly the fintechs that, to Simon's great point, have the ability to handle massive amounts of volume at a very, very cost-effective and scalable and efficient manner, would certainly go a long way in terms of getting funds through the pipe.
And just to ask a very direct question, you will be using open banking, will you not, in your ability as a CBILS lender when you become certified to lend to customers other than your own?
Yeah, great question. I don't know that I actually have the answer, to be totally honest. I think, to be honest, I think you asked Simon a question around banks focusing on their existing customer base versus external, and actually, I think a big reason of that is really a scalability feature, right? If you think about a lot of the core banking systems and internal processes of the traditional banks, like it or not, there's a lot of manual intervention that happens, and so dealing with the existing core customer base and making sure that you're there to support the clients that have already signed up with you and have put their faith in you, I think is really what's it's taking 100%, 120%, right, of everybody's time. And so I think it's really, rather than it not being a desire to support the rest of the economy and the rest of it, I just think it's an inability to be able to do so more than anything.
And I think that's a good point, very well made. Thank you, Craig. What is the metric, therefore, during this process that we should judge your success in supporting and financing the economy? Appreciate, because of the manual nature of your processes, you'll be focusing on your own customers. So how do we judge your success?
Yeah, I mean, generally, I think people really speak with their actions as opposed to their words. So, our typical measure of success is innovative companies continuing to choose SVB as their main strategic partner. We currently bank north of 50% of all VC-backed companies in the U.S. and we're working with kind of north of 2,000 innovative companies in the UK and broader Europe. During this period of time, though, it's I don't know that there's mainly specific numbers or metrics. I mean, NPS is a great one, but during this period of time, it's it's really our clients feeling like they are the strategic partner that is willing to lean in, and that they can pick up the phone and ask us not just about the cash in their bank account, but actually about advice on everything else that they're dealing with, and leveraging the institutional knowledge and portfolio of experience across all the rest of our client base. So I really see SVB as a connector within the ecosystem, so to say. And so it's maybe a little bit more qualitative as opposed to quantitative, but I think we've already seen that.
Okay, so we'll see how many likes you get on LinkedIn then.
Yeah, no doubt.
if it's going to be qualitative in that way. What is your ask of government, or indeed the rest of the ecosystem?
Yeah, I mean, again, our focus is really on the innovation economy, and so you know, we've definitely been, you know, part of the conversation around the Future Fund, and you know, shining a light on, you know, the innovation part of the economy as part of the, you know, the government-backed support. And so, you know, I was pleased to see that that came out, and you know, that was definitely an ask. I think there's more to come from what I'm hearing, but you know, and then again, just broader ask of the, you know, the rest of the ecosystem is really just to lean in and support, you know, the companies that may be struggling during this period of time. We've got a number of internal initiatives like debt deferral schemes, et cetera, outside of anything government backed that we've launched and are executing on and are pretty proud of.
So just to give everyone background on the Future Fund, this is a fund being launched probably late May to support government, to support those companies which are VC backed. Quite a lot of detail to be worked through in the Future Fund, and we look forward to receiving that from government. Right now, David Beardmore, you are Ecosystem Director at Open Banking. And Open Banking's remit is to deliver the Competition and Market Authority's order, which is all about driving competition and all about driving innovation. Yet we hear from colleagues on the call this morning that it looks like we've cut the legs off competition and we've stifled innovation. You must be absolutely furious.
Thank you, Louise, for that wonderful intro. What we've done. Let me answer by what we've done. We've pulled together an initiative called Power of the Network. I would argue that actually innovation has adapted, that it is strong, and there is good things happening. I understand Simon's perspective. I'd agree with that. But in terms of what we're seeing from the open banking community, I'm seeing tremendous creativity, fantastic passion and effort, and real ingenuity. So the speed presentations we had at the start, I would thank those because they feature on this Power of the Network piece that we're doing, along with many, many others. So what we've done with this thing that we call the Power of the Network really has got two objectives. Number one is to shine a light on the incredible stuff that is happening right across the open banking community. We know that there are lots and lots of things that are happening which are not open banking related, particularly when we talk about SME funding and some of the government schemes. Our purpose as the open banking implementation entity naturally is to focus on the open banking related products. But on the website, on the openbanking.org.uk website, in there you'll see from our homepage this Power of the Network. And as of this morning, I think there's 28 or 29 separate initiatives. Some of them, like Credit Kudos, like Token, that were featured earlier today, are on there, along with plenty of others. So the first objective is to shine a light on what is happening there, to show that there is tremendous innovation, I think, and there is great adaptability of some of the fintechs. But the second that I think is probably becoming more important is that we in the OBIE, we sit in a privileged position in the ecosystem, and we want to use that position for maximum effect. So, for example, Imran, the trustee of the implementation entity, has, by nature of the role, plenty of access to government and government departments. And so we're able not only to collate and compile what's happening across the ecosystem, but to draw out from there some of the asks of government from the experiences that we're seeing from all these different initiatives and products and services that are being launched, to bring those to the attention of government and to make specific asks. And I would say that many of the asks that we are putting forward echo what many of the previous speakers and presenters have already articulated.
And can you please share not only what those asks are, but also give us confidence? Is government listening? What can we expect in terms of concrete action, and by when?
Yeah, if I do it the last first, yes, absolutely, government is listening. And the opportunities that Imran and others within the open banking community have to put that case and to make those requests for help are not just one-offs, they are continual dialogues, and we continue to press that case. I can't speak on behalf of the government. I can't say whether they will or won't, do any of these things. The asks that we have pretty much echo the comments from Credit Kudos, from Token, and from Simon at Funding Options. So there are 4 that we're asking at the moment, although they are adapting as we learn more, but they are specifically that government allows income verification services that are powered by open banking to determine income for self-employed people. That's one thing where we know we have so many fintechs who have a service that already delivers exactly that. And when some traditional entities are struggling to be able to do this quickly and accurately, there's a pile of fintechs ready and willing that can do that. So allow income verification via open banking. Second one is more to Simon's point about encouraging lenders to use open banking data to support claims for forbearance. So where you need to be able to validate eligibility for loans or to make other decisions, open banking data allows that to happen in an accurate and timely manner. Third, we're asking that government publicly backs open banking powered solution to credit provision. And then fourthly, that there are a whole range of open banking powered services which provide advice and support both for SMEs and for consumers. And there's a good number of those on the Power of the Network page that government listens and allows those to have a voice and provide support. So yeah, we are asking regularly for government to recognize that open banking has part of the solution. We don't claim to be the entire solution, but we believe that we can plug, or the open banking community can plug some of those holes and some of those gaps that the traditional lenders are, to be fair, struggling with, as Simon and others have articulated already.
So those are 4 very sensible asks of government, and it's very polite of you to be asking rather than emphatically demanding. But what is the metric by which we judge your success? You're at the centre of this ecosystem. You have a crucial role to play. To be clear, innovation and competition, the enablement of competition and the survival of innovation sits with you. What is the metric by which we judge you, David?
Okay, so the whole purpose of my role and the team that I lead at Open Banking is all about increasing adoption of open banking powered products and services. That was our mandate before this COVID crisis struck, and it remains so. It's just that this particular crisis has put a very urgent angle on what we're doing. So for us, we continue to measure and monitor and crucially encourage the growth of the ecosystem. So I want to see more innovation. I want to see more fintechs providing products and services that meet needs of consumers and businesses that are powered by open banking. We continue to measure that. As you see, every month we put out an update of the health, the numeric health, if you like, of the ecosystem. So the number of participants, the number of regulated entities, but also through things like this Power of the Network, shining a light on the specific products and services that are providing solutions in this particularly challenging time. So for us, we're continuing what we started to do, which is to grow this ecosystem numerically, number of API calls, everything, all of those metrics. We want to see them expand and grow.
Perfect. Well, we look forward to judging you on your performance, and we appreciate the clarity with which you will share those metrics. Now, I'm just running down the questions that we have been asked. I think we are coping with quite a few of those questions. Thank you to everyone who have submitted them. Now, there's a question here. Barriers to open banking demonstrating its value is firstly adoption, then take up by customers. Simon, this is a question I think you're putting to David and perhaps to some other members of the panel here. You're saying the former, i.e. adoption, should be a formality, i.e. mandated. The latter will improve over time. So I think Simon's making a point there, David, for you about can we mandate adoption, particularly by these big banks? And then we're talking about adoption by customers. So how do we demonstrate the value there? Because it then becomes exponential. Once you've got the businesses to adopt it, the end customers, whether those are small businesses, medium-sized businesses, or even consumers, that adoption then skyrockets.
Yeah.
How do you handle that?
Yeah, no, fair point, fair question. Obviously the mandate is there on the 9 mandated banks, the CMA 9, and most people on this call will be familiar with that. So the requirements on them to open up the API access, that is happening. That is then powering the very products and services and in fact the organisations, many of which have spoken today. The issue about consumer adoption is very close to my heart.
Hang on a minute, David. I just want to come back to you about that. Yes, you are technically right. API adoption has indeed been mandated. The banks have had to spend the money to do that. I'm talking about adoption of their attitudes, of their behaviours, of their service. I'm not talking about the API adoption. I'm talking about the business adoption.
Yeah, and there are varying views there. That some will say, everything should be mandated. You should force or make available these products and services on a mandated basis. Others take the view that says it's far better that you're market led, that you encourage products and services which meet real challenges and real needs. And therefore the adoption grows because people want them, not because they've been mandated. There is some argument that says within this particular COVID crisis that some of the products and services should be, might be mandated because I know, as do many others on this call, that many of the fintechs have real tangible solutions right now to the very things which are being challenged, or some of the historical traditional routes to providing access to funding, to speeding up loans and so on. But those traditional processes are struggling, either failing or just struggling to deliver on time and accurately. That there are fintechs that could plug that gap immediately, and therefore the answer for some people is that should be mandated. Those are the conversations that we have. We want to make the case as strong as possible. We're not in a position though to mandate. Does that answer your question?
It does, but what it tells me is that if mandating is to be done, it needs to be done by somebody, because there's a question here from Radek, which is the business model for neobanks and challenger banks sustainable in the long term? What about profitability? If we wait, if we're tentative about this, the scenario is that competition disappears from the marketplace because it has been effectively removed by government support being funneled so directly. So I would like a short thought on that from David, and then I'm going to come to Simon for you with that answer. So a sentence from David and then over to Simon.
Yeah, okay. I'm an optimist. I see plenty of innovation going along. I see there is a challenge, but there's a challenge across the entire economy. So I think it's slightly harsh to be able to push that specifically onto the open banking community. What I see from them is tremendous adaptation. The COVID credit team working over a weekend to deliver that. That to me is open banking innovation at speed and at pace, and delivering something that is very real. It's not the entire answer, but I see some really, really great and positive things there.
Simon Cureton.
So David, I agree with you. Just to be really clear, when I was talking about the potential a potential decrease in innovation, it's very much in that SME lending sector, and it's simply linked to if the same status quo now is drawn out for the next 3 months. Some of the innovative firms may no longer be there. Simple as that. Innovation, you're absolutely right, is very much alive and very, very healthy, as we've heard today. I think the case for open banking in relation to COVID, as a response to COVID-19 or as an accelerator to sort of execution or delivery or success in COVID times, I think it's really, really, really critical. If you look at something like the bounce back loans, the intent is it's going to be an online form, relatively short, 100% backed by the government, issued within 24 hours in terms of the payment. That's fantastic. If there is any element of the assessment by lenders who are distributing that product that relates to underwriting or affordability, then open banking would be absolutely the solution, right? So connect up your bank transaction information via open banking. You get it presented beautifully, and it's a very, very quick either digital consumption of certain variables that you're presented with, or it's a quick screening, yep, bang, this looks amazing, away you go. That's for me where it could play an absolutely wonderful role here.
And I agree absolutely with you there, Simon. I mean, one of the issues for me is that many of the benefits that some of us have been talking about around open banking for years, Louise and myself and lots of others, what we're seeing now is not that there are new applications and new benefits that are coming to the fore. What we're seeing is that the COVID crisis is ramming home the urgency to allow these benefits to come to the fore. So you're quite right. You know, if there was a paper process that says you have to submit paper statements and then a human takes 2 weeks in an organization to pass it around different departments and eventually get a decision out, that's no good right now, because there are SMEs that certainly the ones that I've spoken to, or the organizations representing them, that are on their last legs and figuring out whether they can survive. So the speed and the accuracy, which have always been the benefits of it, is coming home right now.
Thank you, David. In our last minute, I'll just do a quick summary of the asks for government. From Credit Kudos, we had a sense that the FCA, the affordability rules do not need to change, but the guidance should be changed to include open banking data sources to ensure that affordability rules can be applied swiftly and accurately. From Token, they would like the government to just buy their service. From Nesta, we had an ask of the community to support fintechs. From Funding Options, we had a very clear sense that open banking should be mandated, particularly in the way that David just described here, to facilitate fast, accurate dissemination of loans. I think the standout metric for me was a single open banking powered alternative lender can get 100,000 loans out of the door a month, whereas the combined might of the incumbent banking sector has managed 26,000 loans to date. Silicon Valley Bank asked for a greater clarity and pace on the Future Fund, and open banking had 4 entirely sensible asks of government. We are assured that government is listening. We would like an active demonstration thereof. I would like to thank each and every one of our panelists and speakers today. I'd also like to thank the audience for their time and for their attention, and critically for their questions. So thank you one and all.